Hi investors, it's Nick Garner here, and we're going to do a really quick walk through the capital growth tables and just explain how to use them, just so you know. And the way this goes is we've got the tables here, and below the tables we've got a graph, and the graph shows you the same information as is on the tables. So for example, you can do you could pick northwest, for example, and there you go. We've got the northwest. We also got northwest Leicestershire. And if you wanted to, you could just filter and just show regions only. So let's do that. And I'll just clear that field. And then it shows you the averages for these overall regions. And you can clear that. So most of the time I expect you would use it for checking postcode districts, for example, so M4, and you can see here you've got quite a lot of M beginning with 4, like M40, etc. Now, if you have a situation like this and you want to look at the graphs as well, then the easiest thing to do is just to pick a unique variable. So you know M4 201990. So let's just do that. 201990 and 201990. Now I know it's a little bit of a faff, but it's part of the limitations with this table that I've found. So the other thing to look at, you've got the average house price, obviously, and then you've got capital growth or the market upcycle from 2003 to 8, and then the market downturn from 8 to 13. Then the peak to peak. So I have this little graph here just showing you that there are lots of market cycles, and here's the last peak. So the peak to now, that's what that means, 18 to 21. And then from the bottom of the market as an average for the UK to current, and then what's been going on over the last 3 years. And then here I've built an algorithm which is a ranked score. So it's an indexed score, but it's based on rankings. And what it does is it just looks at, for example, for crash resistance, which areas were the strongest between 2003 and 2008, and which or should I say, which areas were strongest between 2008 and 13, more to the point. So this was the down cycle, so the crash. Then how the area did long term. And this factors in short-term capital growth and long-term capital growth. And then recently how it's been doing. And then overall, I give it a score. And the score is based on as I say, averages and so on. So 50 is the middle. So I'll give you an example of a really bad score. And that will be FY1, which is in Blackpool. So FY1, and there we are here, and we can see it's got an overall score of 8. But if we pick, say, M4, which is W4, which is Chiswick in West London, we can see here it got a score of 73. So it's done really well overall. Small decline recently, but overall it's very crash resistant. It's had good long-term growth since 2013, and recently it's not so great, but it's okay. And all of these correlate with my own experience, and I've double checked all of this data and triple checked it to make sure it's all accurate, and it seems to be. I've also worked this through with Martin, our lead analyst, and he seems happy with it as well. Now, finally, as I said, if you wanted to, as I said earlier, you can look at the graphs here, and that gives you an idea, a visual kind of indicator. So you can see here between 03 and 08, M40 just went crazy. There's the thing there. And then declined not too much, and then came up, capital growth wise, came up pretty well. And then you have the averages here, and you can see that in recent growth it's done very well. It's like right up there. All right. Finally, going to show you a little bit of stuff on the data. Now, this is a big topic, which I'm going to keep really short, but the way it works is that I've got the capital growth data from Office of National Statistics. They release a bulletin every 3 months. I then inflation adjust all of this, and then I pivot table it all just to tidy it all up. So there's lots of spreadsheet stuff going on here. And then I've aggregated it, and as you can see here, you've got the rankings. So how, for example, the Midlands ranks 8th on capital growth between 2018 and 21, for instance. And then you've got other metrics, and they're run through a little algorithm that I've created. And I have variables for this, so it's different weightings for different indicators. And also, as I mentioned earlier, I've inflation adjusted everything. And just to explain how that works, if, for example, you bought a house in 1997 for £100,000, it would be £191,000 today if that house kept exactly in line with inflation. So it's very helpful to inflation adjust property prices over time to understand whether they grew ahead of inflation or didn't. And so I do this by creating a calculation, and then it turns into these metrics here, which are the real capital growth, the real degrees of capital growth or decline between two certain dates. In this case, for example, March 08 to March 21. Okay, then, I hope that helps. Thank you.